Welcome to Markets Now. I'm Michelle Rook with Jim McCormick, agmarket.net. We ended with pretty much lower prices in both grain and livestock futures trade today. And Jim, thanks for being with us. I want to start off with soybeans because we did end slightly lower there after a big rally, got well above the $12 mark in the May contract finally. Why did we give up that early rally? Was it the pull from wheat or farmers selling, or what happened?
Well, I think first of all, we did hit some farmer selling. Once you, like you said, the May got over $12. It has attracted some farmer selling. We kind of get the feeling here farmers are selling beans and maybe holding on to corn a little bit tighter fisted. So that was part of it. Part of it was a higher US dollar, Michelle. The other thing was the wheat market being down was a little bit of a drag. And then lastly, you had Agriconsult come in. They put their bean crop there at 152.2. That's quite a bit higher than what Conab was saying yesterday. So that might have kind of thrown a little bit more confusion as to what size of crop we have out of Brazil, and that might have led to a little bit of profit taken by some of the length as well.
No doubt. And then, like you say, the lower wheat market did not help. And the wheat market, was this just a reaction to China canceling wheat all over the world? It's not just the US now, is it?
It's pretty amazing. Yeah, I think that was the kind of lead story. We know they've been canceling U.S. wheat. Now there was reports they canceled French wheat earlier in the week, and then last night they were saying they were canceling potentially Australian wheat. And that, I want to say it's unheard of, but I do not remember it if it has happened, Michelle. We are speculating that China is pretty much getting a better deal from Putin and the Russians. Russia has a lot of wheat left over from this last year's crop. This new crop looks like it's relatively stable to maybe a record potential by some estimates. So they've got a lot of wheat to sell. And we never know. There may be a barter deal going on. So time will tell. Adding maybe a little bit to the negative tone was also, it is raining here in the Midwest. It's raining here in Chicago today. One of those good, late or early spring, late winter rains that, the wheat crop would definitely like to see as well.
Yeah. And of course, the cancellations that we've had here in the US by China did show up in the export report. A marketing year low for weekly exports this morning didn't help, did it?
No doubt about it. I mean, the sale cancellations have been out there a couple of days, but there's some traders that, computer traders, analog traders, they are programmed to trade that export number. Is it higher than lower than the average guess? And if it comes in low, they sell it. So that definitely added to the negative pressure today.
And Jim, the corn market also falling. Did it just follow wheat, or was that a function of, again, hitting some chart resistance?
We failed a little bit of technical chart resistance. I think that was part of it, Michelle. The other thing was we're a little bit technically overbought. When the wheat market goes down hard as it did, it definitely has a little bit of negative effect on the corn as well. The dollar trading a little bit higher also was a little bit of a concern. I'm not actually fearful of the corn market at this point in time. The overall near-term trend is still up. The corn market pretty much held back to kind of the short-term moving averages. And that's kind of what we do when the markets try to put lows in. It's not a straight vertical move up, kind of like the cocoa market has done recently. We tend to take 2-3 steps forward, then 1 to 2 back, and just work our way up. If we can find some buyers early, late this week or early next week on this pullback, that'll be, it'll look technically fine.
Yeah. And from an end user standpoint, obviously exports were good this morning, and we had a big, another Mexican purchase. So we must be at price levels that are value.
We are competitively priced. And then look at the domestic side, Michelle. Ethanol runs still continue to be very good. You got the oil market overall trading in there pretty well. The economy is pretty strong at this point in time based on the, the unemployment numbers and some of the other economic numbers out there, despite the higher inflationary readings. So, overall, that should be, that higher energy move supports the ethanol, should support the corn market.
Yeah. We should talk just a little bit more about that. Okay. So PPI out today again, like you said, maybe points towards the Fed not lowering rates for a while. The dollar went up. And of course, that might have added to a little bit of the risk off too, don't you think?
Well, no doubt about it. I mean, there's a lot of people on the macro front, Michelle, that are they were convinced that the Fed was going to cut interest rates early this year and be very aggressive about it. We've had 2 inflation readings this week, I should say, that both show that inflation is still a problem. Now, I do not think the Fed's in the mode where they're going to raise it anymore. It's just the fact that the market was priced in some cuts. They've now got to make some adjustments. I think if we get rate cuts, it's not going to happen to the end of the year. So you might have had some macro play going on versus the commodities, the dollar, and stocks, as some of the big players are readjusting their thought process due to the higher inflation than anticipated.
We're also getting some private estimates out on acreage already. I know you guys are going to be coming forth with yours pretty soon as well. But what are you thinking we are going to see for an acreage mix, and what's playing into that decision the most?
Right now, we're thinking our bean acres are going to be right around 81.6. We're looking for our corn acres to be right around 91.5, and all wheat acres right around 46.2. We do think the corn acres are going to be down a little bit from last year, but maybe not as hard as some people think. The reality is, Michelle, a lot of producers last fall got a lot of fertilizer on. The fertilizer price had dropped quite a bit comparatively. The price of grain was very, very attractive. And then on top of it, we just had a fantastic fall. So I think a lot of the decisions have been made in the fall. But that report here at the end of the month always adds a little bit of volatility to the market. So we'll see what the other firms are thinking.
Yeah. Cattle market did not have a good technical day for sure. So we went up, made new highs for the move, and then the April contract filled a gap area and failed. Is that a concern?
I think if you are a trader, you got to be a little bit concerned. I mean, we hit overbought. You tried to take out the contract high, the near-term highs, and you fail miserably. That's not a bullish sign, plain and simple, and close near the lows. But in the overall macro sense, the economy, like I said, is still hanging in there pretty strong. I mean, early reports from people who've been able to go on spring break tell me, the hotels are full, the airlines are full, the restaurants are full. So I think that's a good sign for the economy. But the market was a little bit overbought and due for a little bit of correction. But as long as the economy stays somewhat strong into the spring and summer, I think you got to be a little bit positive on the cattle market, except for the outlying, black swan event.
Thanks for joining us. That is Jim McCormick with agmarket.net, and that's Markets Now.